Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Where are we here? I think we are Thursday, the 14th of May. Ay, caramba. Tomorrow, I guess, will be officially halfway through the month. So, I hope you're enjoying this very odd spring 2020. I'm sure we're all going to remember this in our old age. Hopefully, we can all get to old age. Fascinating times we're living in, I'll tell you that much, by crackers. The only thing I'll sort of start this message off with, and it's just a reiteration that we've said recently. I have to say I'm pretty darn impressed with the online community and the amount of faith that you've put into good old Brian and the TRI team. Because wow, you guys have really stepped up here and taken advantage of the recent class enrollment, and then also our little promotional special deal here. So if you are sort of sitting on the fence, and actually for whatever it's worth, we officially brought on our second TA for the level 1 program because it's going to be a pretty big class. But and for whatever it's worth, that TA happens to be my right-hand man here who helps me with the daily briefs, good old Kevin. So if you want to work with Kevin directly, there's another incentive to join the program. But as you can see, we've got about maybe 5 or 6 days left on this special promotion that we're doing. Check it out. If it appeals to you, awesome. Run with it. The one thing I absolutely loved about this page when David put it together was actually I don't even know what happens. Was the video testimonials that I had recorded when I was in Europe. These people, this gentleman right here, Sjord, he is our CTO. So if you want to get to know the actual brains behind the website, that's him. Bart Senna is a crypto OGer. He's been in crypto since forever, and he's a core member of our site. Bart, good luck, Bart. If you're watching this later on, I sure hope your uranium stocks are doing well. I remember Bart was super bullish of uranium there a while ago. And then we also had, which is so cool, they threw on this interview set with a whole bunch more OGers that we had at our TRI meetup here in Vancouver last summer, which was totally awesome. So, the cool part about it is this page, look at these testimonials. They just read so pretty. And you can also get to know our community a little bit and get to know some of the people that are and why we do what we do here. So, David, hats off. Great stuff. At the very least, you can come to a page like this and just get to know us a little bit better. And all right, I'll just leave the conversation at that with regard to the promotion. So, as our breadth indicator is sort of suggesting here, market is feeling very toppy here. Whether it be stock market, whether it be the junior market, whether it be commodities. Commodities in general actually are okay, but they are looking a little toppy in my opinion. So any kind of failure, prices could come down appreciably. But also too, in crypto, we're humming and hawing. Are we at the top? Are we at the top? What's it look like? And actually, Julian did a really great presentation today. Thursdays is officially the baby powder report. And Julian's opportunity to share with the community how he's looking at the market. And the feedback actually through the daily brief, it was a bit long. It was about an hour and a half today. Was that people really enjoyed the back and forth banter between Julian and myself and the community members answering questions and stuff. So it was really, really cool session today. And actually, if I'm not mistaken, I think we're actually sending out the daily briefs to old site members as sort of, hey, we haven't seen you in a while. This is what we're doing. So if you do get that email today, old site members, old school members, stuff like that, check out what Julian had to say today. I thought it was pretty good stuff. With regard to your conversation I like to have with you guys here in YouTube free video land, as we've been sort of talking about recently, I still believe that the US dollar index probably the best place for us to start our conversations. And then, of course, if you start seeing structure and all that kind of stuff, then, hey, better pay attention because it probably means capital is moving. And we've been watching this sort of consolidation since the last sort of crisis event. Just wondering which way this thing was going to break. And I've got one low. I've got this key low. Remember, this was a funny holiday session. Interesting how that's painting an outside upside engulfing bar. It's not quite a key reversal, but a pretty bullish bar anyway. And then we've gone and put in a railroad tracks here. Very solid, strong close. And here we are, US dollars pressing higher again. And as I'd sort of mentioned in, I don't know whether I talked about it in Daily Brief or not, but actually that's probably not the screen I want. I want stock market land. Where were we? Over here? Nope. Anyway, I wanted to show you that the euro is looking very dangerous. Here's my euro chart. I don't like the look of this at all. So if we're thinking U.S. dollar index up, remember this is like 35% of that index, and I wouldn't fault anybody if they were like, Brian, I'm thinking short, I'm thinking down here. That to me looks extremely dangerous. But we'll see what happens. If the Europeans can hold their lows and get this thing back up to start Wing out, then I'll take away that sort of bearish enthusiasm. So, U.S. dollar pointing up, big bull AB equals CDs. We've got, of course, the whole world economies are opening back up now. We went through a bit of a lull there in the market, and I think I had mentioned guys like Zell were saying that, really it's not really a question in like risk on, risk off through this dead cat bounce. Actually, this would be exactly the analogy of dead cat bounce. And he was saying that it's not really necessarily like there's a lot of new business getting done. It's just that sellers don't really want to sell unless we're back up top. Buyers don't really want to buy unless we're down below. So in that kind of environment, you get this sort of vacuum where price just drifts. And usually we set things like 50% rules as sort of a very normal, natural retracement level. You've heard me talk lots about Mountain Man, one of the best crude traders I ever worked with. And it shouldn't really surprise us that, gee whiz, there was a gap there. Mountain Man level, and then the end of this AB equals CD, that this is sort of where the drift, that sort of lack of business direction, kind of stalls, right? The dead cat bounce, but where is it going to stall where actually some sellers might actually step up and do some selling? And I think that's exactly what's going on here right now. It was interesting to see how they really opened up the market on its knees. I got a funny feeling that a lot of the price action you're seeing on things like futures right now is to try and goad people into shorting. But keep in mind, tomorrow is an options expiry. And I wouldn't be surprised if they actually have a very specific level that they want to take this thing out into tomorrow. But we'll see. Anyway, you shake it, as I had on there just a moment ago, stocks are starting to M out. If we close below this sort of 2830 area on the S&Ps itself, you will know that M confirmed. And of course, what are we supposed to think if we ever see the market smiling at us, right? You all know the answer to that. So, don't be shocked if this is our seasonal peak. Selling may walk away. Big celestial events coming up here at the end of June, beginning of July. And of course, everybody is being told that they can go out and party again. And my hunch is probably within a couple weeks, we're going to start hearing about new hotspots of COVID infections. Anyway, only time will tell. Long and short of it here, there's no way in hell I would be a buyer of things like the S&P 500 here. Couldn't touch it with a 10-foot pole. Interesting, because I've been seeing that, the chart that I've had on the screen here has been basically useless of the spot market for crude. Thought actually I'd go and if I was actually trading crude back in the old prop days and stuff like that, obviously I wouldn't be trading the spot markets, but I'd be trading the deferred contracts. And it's interesting, we were sort of debating this. We do have a double bottom here on this August contract. We do have a big spike off the lows. We have a nice consolidation in here. So believe it or not, I could actually understand, especially if we go down to things like, say, like a 4-hour chart. You should all look at this and go, gee whiz, that kind of looks like Brian's bot setup, if I'm not mistaken. So boobity boo. We'll throw on bot setup and we'll go boobity shmoo. And you can kind of see how the levels are actually starting to really set this up here. So I actually kind of was thinking that we would just sort of settle in a range here, but you can see the market wants up. And I wouldn't fault any professional traders that were like, I'm long from 28.11. I've got my stop at 25.99. This low here, I think it's 26. Yeah, 26 even. And I'm actually now looking for $35 a barrel. How ironic, eh? I mean, what a joke capitalism is. What happened to negative $30 a barrel? How quickly everything turns around. What happened to Russia and Moscow having a crude oil trade war? Obviously, that was purely a play to try and drive the U.S. shale industry into bankruptcy. And I actually think that that whole strategy completely blew up in Russia and Saudi Arabia's face, because the U.S. bankers just said, fine, you know what? Yeah, these companies, they're not going to be making any money right now. They're massively in debt. If the market was just left to its own, they would all have been forced into bankruptcy. What does the Fed do? Obviously controlled by U.S. interests. They just go and take interest rates to zero and say, we'll just roll the loans out. No big deal. And in fact, the Fed has now actually come out and they're buying corporate debt paper. So they're actually buying these bad bonds off these oil companies. Sorry, Saudi Arabia and Moscow, you don't understand who's driving the bus here. And ironically enough, I think that this whole play down was just purely a geopolitical play, and it backfired in the Saudi Arabian Russians' faces. Well, we'll see what happens. Only time will tell. Looking at this chart, I can realistically make the argument that, you can see the cheeky little gap right up top here at $35. There's a cheeky little gap here too at 31. There's lots of unfinished business here, and the W is in. But as I've said repeatedly, I might trade this, which is totally fine. And in fact, actually, I took a silver trade that set up basically the same thing, but it was in a company, and the company came out and fucked me this morning. We'll talk about that in a moment. But isn't capitalism wonderful? But interestingly enough, I don't have a problem if a trader said, look, I'm not in love with oil. I don't want to invest in it, but here's a trade setup. I'm taking the trade. I'll live with the results. And obviously, this is a pretty damn big risk window. On one contract, that's like $2,160. Probably a little bit deep, too much for us cheap asses to consider. But, you might want to look at some of your oil stocks. You might want to look at some of the ETFs, those kind of things. There might be a trade there for you to consider. So anyway, it is what it is. Do with it as you please. I hope you can benefit from that information. And maybe what that means, if oil is indeed pointing higher, risk on, maybe that means the stock market isn't quite ready to collapse here. I don't know. We'll see what happens. Trade your setups. I hope that information helps you a bit. Interesting how we've been sort of prattling on recently about this narrow sideways channel in the bond market, and now the bond market has actually gone and put in a W at this channel top level. I don't know whether I'd be inclined to pound the table. Remember, we did hunt like bullish bot setups, and ironically enough, remember, stops are supposed to be against these lows. Those bullish setups are still working. And then as you can see on here, and we really don't need this anymore, but I was walking through how somebody would put on a straddle or a strangle. In fact, the option strategy that I pointed out here, this would be a strangle trade on the bond market here. But obviously we don't need this stuff for your video, and I'm kind of rambling here today. I think I told you the daily brief is supposed to be an hour, and today's video was like an hour and a half, an hour and 45 minutes. So Brian's got a little bit of a blabbermouth today. Sorry, everyone. Anyway, so you can see the bond market. End of June, celestial events, COVID. June's usually a crappy month in the stock market anyway. That's what's staring us right in the face. So, If we start going crazy COVID here again, I could see the bonds work their way higher. Long and short of it here, we resolve bullish. I think we're heading right back up to new highs. If we M out, then I think we're cranking right back down against these old lows. So I hope that helps you. It's not really much new information there. And I find it fascinating that we're seeing, whether it be the US dollar, whether it be the stock market. Keep in mind, this is a 4-hour chart, but if we change that back to a daily, you can see we're kind of going sideways, Bond market kind of going sideways. Interesting. The gold market, same sort of thing. And interestingly enough, I'd actually put out a tweet here this morning. I was actually quite surprised to see. Question is, where the hell do I have that damn chart? That we have both bullish bot setups setting up on the gold. And I even put a tweet out yesterday to the effect that the silver was firing a buy signal. I went and bought a silver stock that looked to me like it was basically following that same lead. And the goddamn silver stock just completely collapsed here because the company came out and did a financing way below the current market. Oh, wonderful. Anyway, I guess I don't need to show you that here. But I did put out a tweet basically saying I had to walk away from that little setup that I traded there on the GPR. That was this trade over here. So the gold and silver, I actually, believe it or not, I think they're actually pointing higher. I don't know whether it's going to be a straight line because, with the crazy crude, now where the hell am I going? Well, let's just stay on here. With the crazy crude also pointing up here, I'm not quite sure who's right. Usually these markets don't move in unison. Usually either crude's down, gold's up, or crude's up, gold's down. So I'm not quite sure what's going on here right now in the short term. But, interesting. Bonds, narrow sideways channel. I think you can make the argument the gold's in a narrow sideways channel. The crude is in a narrow sideways channel. The stock market is in a narrow sideways channel. That's kind of what M's look like. The US dollar is in a narrow sideways channel. Holy crap. Something big is coming down the pike here, folks. I don't know whether we can make any clear bets or, sort of conclusions. You can always make a bet. I don't think we can make any conclusions about the trend right now. I think we have to just wait for whatever the break is and then just go with that direction. As for stocks themselves, remember we had said yesterday and, past few days, anecdotally, I did it again. I always pull up that damn Pine Script thing. Anecdotally, we'd probably be able to tell whether the seasonal rally is done for the stock market if the junior stocks start breaking down. Uh-oh. It looks to me like the junior stocks have M'd out, right? What are we supposed to think if we ever see the market smiling at us? So, my hunch is probably the junior market and sort of that speculative part of the market. It's probably unwinding here. So just be aware of that. It was nice to see, and keep in mind, I'm a stock. I have a lot of different assets, and I don't like to take more than about 1% to 2% risk on any position that I have in my account. So, if I'm dealing with 100, 200 G's, what kind of dollar-sized bets that I'm placing, and you can understand how many different positions I can have on. So I do have a fairly robust portfolio. And what I've found, me personally, it's just really a question of just managing your money. Trade your setups. Obviously, if anticipated profit levels are hit, you got to make damn sure to pay yourself. And of course, I have been paid very well on a number of names here over the past couple of weeks. So I got nothing to complain about here. But here's a great example where this is a stock that basically doubled off of my purchase price. So I'm more than happy to take profits. Here is an example of a stock that was putting in a bullish bot. And as I told you earlier, the worst part about it is the silver bot setup is still perfectly fine. I just got hoodwinked by this damn company. And it does happen. We have TRISOF, our fun little trading group that trades the penny stock market and penny options market. We meet every Tuesday. And we had a bunch of this shit happen through the COVID, that first initial crisis. We got beautiful setups. Everything's looking fine. Remember rebonds. Thank you, Mr. Draper. It wasn't really that crypto was going down. It wasn't that, stock market was going down. It's that the company ended up coming out and fucking us. So that's basically what happened here. The setup was fine, but we broke these lows, and I said if we broke these lows, I'd have to walk away, so I did. I had to take about a 13% loss on the trade. I can live with that if I can bang out 100% win on my winners. I generally like to just build free positions in assets. And the cool part about it is when you look at something like this NVUS, I mean, you tell me, is there any more room for this thing to run up? I mean, there's a big old juicy gap sitting up top there. So I kind of like to just make sure to get my original money back in my pocket. The other day when I sold the entire thing on a double, it was because I was so pissed off about that rebonds. I wanted my money back, so I just took the profits and run. But this kind of guy here, I've already sold half on a double up top here, so I haven't got any risk now left on this position, and I'm just going to let it work. And I'll tell you, if we get up into this 2.5 area, you're probably going to hear that I've sold another half on a double, yada, yada, yada. It's just a trader's life. And actually, the one thing that I noticed when I put these tweets out this morning is somebody I've programmed you well enough that somebody replied back, yeah, it's a trader's life, rinse and repeat. So that's good. And also, too, that takes away a lot of the emotion from this whole game. Personal self-worth. I'm a loser. I suck. Well, no, actually, I'm a winner. I rule. No, you're not a winner or a loser. You're just in the market participating. And hopefully your winners, your average winners, bigger than your average loser, you make money over time. Simple as that. Anyway, interesting conversation there I wanted to have with you guys today about what does a winner look like and what does a loser look like. Heading on over to the corn. Obviously, there is a huge debate going on in the market right now. Is this the end of our post-halvening counter trend rally? And if this is the case and we sort of play out as we have historically, now I gotta find the damn chart. Sorry, give me a second. Where did I put it? Such a pretty little chart too that I was putting out for people. Not there. Where are you, chart? Oh, darn, I had it around here. Such a pretty chart. Where are you? You're around. There you are. Aha! I knew I could find you. Our last halvening pump, pre-halvening pump. I'm not quite sure how that goes. Pre-halvening dump, then post-halvening consolidation, and then the resolution. Remember, markets generally don't like to move in just one move, right? You can kind of think of it this way. There was clearly one move from here up to here. And then we had to sort of settle down. And then you could argue that the second part of the move was here to here, right? And if we do things like, if I go AB, CD, what a surprise. Actually, according to this, we could even work our way a little bit higher here, right? But in essence, that's sort of that kind of thinking, right? This was the first part of the move, then there was a consolidation, and this should be the second part of the move. So, on first blush, and also thinking about last halvening event, we got a dump. And usually, doesn't always have to happen, but usually this is just the first part of the move. And then there's the second part. You've heard me talk lots and lots and lots about AB equals CDs. And you can see AB, CD. That's what usually happens in the market. But, let's call a spade here. Is anything guaranteed in this business? Absolutely not. And if too many people are actually looking for or expecting something to happen in the market, I can pretty much guarantee you it will not happen because the trade just gets too lopsided in one direction. So I don't know whether this is the scenario. Nobody ever does. Trade your goddamn setups. What I would say, and the tweets that I've been putting out recently were to the effect that we have location up against previous highs. We have indicator confirmation. We now have actually confirmed double divergence. This is a very, very bearish picture. I mean, we might counter trend rally, and usually actually what they call a MACD rollover kiss is the MACD comes up against the zero line and then rolls over. So I think that's kind of what's going on right now. And usually I've found in my history that MACD usually likes to move in 4, 8s, 12s, and 16s. So if you kind of see here, right, we bottomed, then 1, 2, 3, 4, 5, 6, 7. Well, that's pretty close to 8. That's not bad. This one, we bottomed 1, 2, 3, 4, 5, 6 to get back to the midpoint. Down here, this break 1, 2, 3, 4, 5, 6, 7, right? And then 1, 2, 3, 4, maybe 3, 1, 2, 3. So hopefully you're getting that kind of message that I'm trying to convey to you. We've got 1, 2, probably 3, 4, maybe-ish kind of idea. And then we probably should start seeing some sort of rollover here just to see if this low is really for real. Be interesting to see if we go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Wow, look at that. So from bottom to top, it was exactly 12 in that case. Anyway, where am I going with all this? The general message on our site and what we like to convey to students is if you're going to take a trade, we'd really like to try and have the least amount of anxiety as possible. And what I like to teach students is try and have 3 unrelated reasons to justify you risking your hard-earned money. Things like a good location. Things like indicator confirmation. Things like market structure. Unrelated. So we have a general rule on the site that if you are a bull under the heading of indicator confirmation, and you see this very well defined, and in this case it's a bearish divergence, price was making higher highs, but the indicator is making lower highs. If you see, and this pattern confirms when we go through this low here. So basically the pattern confirmed that bar right there. So once you see this doesn't necessarily mean there's a trade, but if you are a bull and you're staring at a confirmed bearish divergence in your face, we have a general rule on the site that says, bulls, you better cool your jets. It doesn't necessarily mean it's a sell, right? What I would argue is now we have to actually get some price structure to actually frame the short trade. The fact that Willie's stupid, right? There's another reason. Should we be a buyer right now? I don't know. Remember we talked about volume impetus recently with you guys. Look how the bears really ramped up here. You can see there's a real fight going on with volume. If the bears step up and, gee whiz, now we're talking location within location, you can see that all we did was we just rallied right back up to the original fail level, and here we are sitting right on the 78.6 fib. Is this an accident? I don't think so. Why do I say that? Well, if we look at the futures contracts, and really, I hate to say it for the crypto kids, but I definitely think the CME is driving the bus here. The CME, remember we had said earlier that the CME had gapped lower after the weekend. Now, if Bitcoin really is topping here, do you think that the Chicago boys are going to be like, okay, fine, well, we missed all that up top there. We'll just short here. No bloody way in hell. So what did they do? And, here's the worst part about it, because hopefully what you see is, oh, gee whiz, they took the market to new lows, but notice the momentum indicators. They did not make new lows. So you could argue at this point down here, this was a bullish divergence. Sure enough, up goes price. Now, where did price rally to? Oh, gee whiz, we have a rule, and maybe you ought to look this up. How often do price gaps get filled in? Turns out it's a pretty damn high percentage. And what did they do here this morning? They brought the market right back up to the gap, and you're done. So The counter trend rally, dead cat bounce, all that kind of fun stuff, I think it was nothing more than to give the Chicago boys the opportunity to actually, if they were going to sell at the correct level, they've been given that opportunity. If they were going to short Bitcoins, they have been given that opportunity. And lo and behold, look what's coming in on the other side of this rally, a big fat M. So, any way you shake it, we did rally further. That was encouraging, right? I looked at this last night and I put a tweet out and they literally stopped the market right on Mountain Man. And I was like, you can't be serious. Are you really going to fail it right at Mountain Man? Turns out, no, they needed that gap fill on the CME. But, this is a 12-hour chart. I mean, you can look at whatever time frame you want. 1 hour, this is starting to look like an M. Off this 12-hour chart, you can see this is starting to look like an inside bar. And sort of my comment that I put out recently was, I'm really thinking top. And I've showed you that, where'd it go? Here it is. Right this. But what I need now here is I need some sort of structure. And I'll tell you, if we paint a nice M, a nice inside bar, anything like that, you're probably going to hear that Brian's shorting the corn. But as it stands right now, I'm just cooling my jets, and I think I told you, we had a fun little group here in Vancouver. We played this rally both through Bitcoin, buying Bitcoins into that seasonal trough, and also we played some Ethereum calls, which we did really, really well on. We actually just took 100% profits up here and just simply said, you know what? Why don't we just cool our jets? We've far exceeded our annual return expectations, and now I'm just going to let the market settle down. Ideally, I'd like to see the volatility come out of price to set up our next trade. And that's the same message that I told you, I think, for the past few days. And it's the exact same thing that I'm thinking here today. No real big breakout bulls. And if anything, with those bearish divergences now confirmed on things like the spot market, I really have to cool my jets. It is encouraging to see that we were able to get well above here. So I don't think we're actually thinking head and shoulders anymore here. I mean, it's tough because usually this right shoulder has to be lower than this left shoulder. But, we'll just keep this on here for conversation. Let's see how this plays out. And, of course, nobody in crypto wants to see this head and shoulders confirmed, because if it does, that means we're probably heading all the way back down here. Ideally, I'm long a lot of crypto, keep in mind, and that's sort of like hodl kind of thinking. I'd love to see just a nice consolidation, and maybe we'll get ready to set up a nice bullish bot to take us to new highs. But as it stands right now, I'm still in cool my jets kind of mode. The only other thing we'll talk about with you today, but really nothing new to report here. Shitcoins taste great. I think I talked to you guys about this recently. If I had played the altcoin, shitcoin perp index, whatever, I would be on the sidelines right now. Make damn sure that if you do trade these, probably a good example, you can see these monster wicks up top here. Please don't chase. And now, on a name like library credits, and especially if I'm thinking that the market needs to cool down a little bit, I just simply draw my reload zones. And if I did want to get in on these kind of names, I'd probably be starting to shop once price gets back down into these areas. And then, of course, if you want to be a superstar trader, my strong suggestion is to subscribe to Mr. Kavarkinator's newsletter. And that would probably have you bidding down here at about 183 on this thing. So do it as you please, but here's a great analogy. For heaven's sakes, do not chase. Okay, I think I'll leave the free video at that. No idea how long it was. Hope you got some value out of that. Really interesting market state. Everybody's on pins and needles right now. I don't know whether there's any clear direction from today's price action. But it's an excellent anecdote of market state. This is a really tough year for us all to get through. There will be easier, happier times ahead. And if anything, this is an excellent analogy. Everybody, remember what your number one job as a trader is to do. And if you don't know what it is, well, maybe you ought to start watching these videos a little bit more closely. Or maybe even consider coming in and taking advantage of Julian's awesome package deal, and let's get you schooled up so you do know what your number one job as a trader is. All right, everybody. Have yourselves a great day. All the best, and bye for now.